Hi folks, please read the disclaimer before moving forward. In today's video, the topic of discussion is, are you prepared for the crash? Now, a lot of you may say that this is a clickbait topic, and uh, I'm not really here trying to predict when a crash could happen, but I'm going to show you in history how crash and how nobody somehow each time were prepared for it. So crashes happen because people become, you can say, very complacent. Um, Today is 18th of August. What if 19th of August is a crash day? What if? So that possibility, however remote it may be, 0.001% perhaps, and we'll find out tomorrow that it was zero perhaps. Uh, uh, it cannot be ruled out. So mentally, in our, how we frame our outlook, unless you are prepared for a crash, you are not preparing actually. So we'll go through the dynamics of this. So, like, Indian market chart, last 45 years, fantastic chart, going exponential, fastest growing market in the world. We all know this. Indian stock markets are going to the moon. Even on a logarithmic chart, if we see on a 3 monthly basis, we are very nicely going along a very smooth path. Sometimes 8%, sometimes 6.5%, but the growth is reasonably uh, smooth, and there's no reason why by 2047 or whatever that year that we say that will become uh, 10 trillion or even more perhaps, uh, that should not be achieved. So every positive possibility is open, but when we talk about positive possibilities, we should also talk about negative possibilities. There is no physics rule or Newton's law that is written that this has to go up. It is currently going up very nice, to be witnessing and being part of that. But what if it doesn't do the same? So this blind faith that something that is going up will continue to go up forever, that should not be, at least in your back of your mind. At least you are playing for, it's like saying that you I've started to play a tennis match, and I'm playing for the win, but I don't know what I'll do if I lose. I'm not prepared for that. I'll go mad if I lose. That should not be the case. You have to go into the game knowing that if you are really good at your game, that you are likely to win. But I mean, you never know. There may be an adverse situation that you may not win. So retail investors today are entering the markets in record numbers. 2.3 crore new investors have been added during the year. It's the highest addition ever in a calendar year, as per a NSE report. And everybody basically wants that I should, I'm sipping and I will do really well. The dream is to build wealth, and there's nothing wrong in that dream, and to secure a better future. But every great journey requires preparation, especially mental preparation, and uh, not being blindfolded by the narrative that you hear. And not every time is when the markets may reward you. So in recent times, we saw a huge crack in the markets in COVID times. Who could have seen COVID coming? Nobody, right? I mean, everybody was in a state of shock. 35% fall. Russia-Ukraine war happened beginning of 2022, 18% fall. Dot com, I don't know if you are old enough to have witnessed that. It was a crazy fall, 50% fall. GFC, many people have seen this one at least. 60 to 70% fall. And this is index I'm talking about. Stocks went down 90%, 95%. So, and if we go back, 1987 fall in the US, 1929 Great Depression, and many such instances of falls are there. Most people have not seen market circuits because since 2009 May, I think market has not had a circuit. So circuits used to be very common prior to 2009. 10% market circuit, Nifty down 10%, and then again Nifty down 10% twice in a day. This was not out of the syllabus earlier, but now it is. So let's not get too pessimistic. It's not also about being fearful, but just being cautious and being informed. So let's discuss four factors that lead to market crashes. So the two key factors that people talk about, that is the reason why people will witness crashes in the market, is first, of course, is overconfidence. So widespread belief that market can only go up. You know, buy, buy at any point, just keep buying, and have no plan to exit. Is because you've heard somebody make 2x at the party last night, so you want to buy that stock immediately. So herd mentality, to for some time that does well, but eventually it will not do well. Eventually every wave has to crater also and then make a new wave up. The second is regulatory gaps in financial rules, lack of oversight, and hence scams and frauds happen. So like a lot of scams used to happen in the 90s. So Big Bull Harshad Mehta, he exploited a loophole in the banking system, and he siphoned funds from the banks and artificially inflated stock prices. So Sensex rose from 1000 in 1991. It's a good refresher also, history refresher. 1991 Sensex was 1000, and by 1992 April it was 4500. Can you imagine that? It is almost equivalent of saying today Nifty is 25,000 and next year Nifty is 120,000. I mean, it's that kind of it's unimaginable the kind of move actually we're talking about. Four and a half times in just about 1 year. That is the kind of move that happened. So speculative frenzy was at a different scale. Regulatory failure for sure. Several deficiencies in the banking system were exposed. Strong market regulator was not there at that time, at least, and uh, as one would have guessed, it crashed within the next 1 year to almost 50% down and more later. Third key factor is speculative innovation. So, we have some fantastic engineers in our country, not the kind who are the regular engineers, but the other kind who are able to engineer, some kind of speculation or some kind of leverage into the system. Very innovative minds are there in India. Uh, so often poorly understood financial products or speculative frenzy in a particular sector like tech or real estate. So, like for instance, Mr. Parik, just following footsteps of the big bull, Ketan Parik used to borrow money and manipulate the stocks of select group of IT and telecom stocks. They were known as the K10 stocks in the Ketan Parik bubble of 2000. And that scam caused, 110% rise in Sensex within a year. And it was also riding on the global move. So it was not just Ketan Parik who got this move done, but he was riding on a bigger wave that was global, and then locally he was able to get that frenzy in the new age technology stocks, and then it crashed and burnt. After that, scam was exposed and the global .com crisis happened, and Sensex fell over 50%. And then, of course, the last and the most important key factor for crashes is unsustainable debt. Excessive leverage by individuals, corporations, financial institutions, creating a fragile system. In today's day and age, we are sitting on a debt time bomb. You would have seen so many YouTube videos and other influencers talk about how US debt is unsustainable. Nobody talks about other countries or states debt. I mean, if you will go look at the state debt of India, several states are bankrupt, and that is the case elsewhere as well. So unsustainable debt. I mean, the whole idea is borrow for the government to borrow and give doles and subsidies to people. All the schemes that are there, people get happy with the government, they vote for the government, and their life goes on. So all that is certainly unsustainable. There is no free lunch in this world, basically. uh, so what we lose is basically through inflation. So we pay direct tax on our income, then we buy things and we pay indirect tax through GST and other means, and then the third and the most important, which is the silent and invisible tax, which is inflation, which is caused due to unsustainable debt in the system. So modern day context, in 2018 there was a crisis in ILNFS. It was a major NBFC, and unsustainable debt caused it uh, uh, to crash and burn. There was a lack of oversight. There was a shadow banking system that was running. and it created a liquidity crisis in the Indian financial system in 2018. Yes bank crisis happened in 2020, where a very reasonably mature and old bank, yes bank I think was started in 2004, so by 2018 it was like a 14-15 year old bank, one of the key bank. Yes bank was one of the constituents of Nifty, so it was a significant part of the Indian stock market system, and it crashed and burned. From 40 rupees, it came down to 18 rupees in a matter of a year or so. So poor governance, deteriorating financial position, unsustainable debt, all these are reasons why, whenever something will sort of unbuckle, it will result in a snowballing effect, and it will bring the whole entire sector or economy down. So that is sort of the fourth leg of this crash reason, and we are sitting on a time bomb on that front globally. Indian household debt, fortunately, is not so bad. While it has gone up from 11 to 17%, I think Indian household debt is not bad at all. But a overseas wave of debt defaults of some nature can always probably happen. And these basically recurring patterns that we have seen over the last 20, 30, 40 years, it is basically all about us not learning from history. Every time we think that things are different, we will never crash now. There is some level of overconfidence in each bull run. Uh, of course, systems have been strengthened. SEBI, RBI, all those AI-based tools are being deployed. All that is happening. There's more financially literate population, but you never know what will cause the next one. So, I'm not saying be afraid and fearful and don't invest. I'm saying be aware that it can happen, and most likely at some point of time it will happen. So because it's like a purging, it's like a, you know like people say, it's a automatic purging, refreshing, reset of the system that has to happen, once every few decades, if not less. If you keep torturing a system, it revolts, and then there's a reset. So the lesson is to not fear the market and be cautious and be informed. If you like this video, do take a look at this other video that we did very recently. If you are over invested, you can watch by clicking that now. And do let us know in the comments what steps or plans have you made for the next market crash, if and when it comes. I don't wish that it comes, but if it comes, what is your plan? Are you uh, looking for diversification? Are you looking for asset allocation? Are you over invested or rightly invested? Do you have emergency funds? All those plans, and how are you going to behave when and if that crash happens? Are you going to be like a deer in the headlight and say that I don't know what to do, or do you have a proper plan how you're going to execute your thing? Uh, okay, so we are also hiring. We are looking for a freelance video editor. So do send us your resume if you know any of your friends is wanting to do some editing. Do subscribe to our channel. Do like and share these videos. Uh, and I'll see you in the next one. Bye.